Well, good morning, everybody. Welcome to the Woodrow Wilson Center. Let people get seated. A few more people are coming in, but by the time you're all seated, we'll get to the interesting part. Let me welcome you to the Woodrow Wilson Center. It's a pleasure to have you all here. It's a pleasure to have this wonderful group of speakers today. We're going to be talking about Latin American energy issues and prospects. This is the 7th of our regional and global energy series here at the Wilson Center, which Jan Kaliski has organized. Special thanks to Cindy Arnson here in the front. Dr. Cindy Arnson is the director of the Latin American program, and to Veronica Colon, right over here, who has really been the driving force on a lot of the Latin America energy work here at the Wilson Center as well. And I saw Duncan Wood out there as well, and Paulo Sotero, who run the Mexico and Brazil Institutes, respectively, and are also involved in today's events. Special thanks to Jan, who has organized all of these events over the past year and really given a thematic coherence to trying to what we see as sort of our niche as the Wilson Center in looking at energy issues. A lot of people do good work on energy around this town, inside and outside of government. But for us, is really looking at the regional aspects of this and then pulling it together and looking globally. How can we actually draw on some of the regional expertise we have and the commitments we have to various regions of the world like Latin America and combine that with those who really know energy field deeply and profoundly. Our guiding framework on this has been the Energy and Security book prepared by Jan and David Goldwyn. If you have not read this from cover to cover, I encourage you to do so. It is a short book. No, it is a rather long book, actually, but it is a fabulous book. It has anything you need to know about energy security around the world and energy strategies for a globalizing world. I mean, it really is looking at some of the trends that are out there. Almost anything you want to know, whether it's on Africa or on the Middle East or on Latin America, you will find some very insightful ideas, not least in the chapter written by Mac McClarty, who is one of the authors in the book. And let me say that for me, it is a particular pleasure today, in addition to introducing a subject that is of great importance and a region that I care deeply about, let me say that for me, it's a great honor to be able to welcome you at an event that Mac McClarty is speaking at, who is one of the great thinkers on all aspects of Latin America and has been a great mentor to me through the years, even before I had the gray hairs on my head. So, Mac, great to have you here today, particularly. And Ali, great to have you here as our two keynote speakers this morning. With that, let me hand it off to Jan. Welcome you all here again, and Jan, take it away.
Well, thank you very much, Andrew, for that great welcome. And at this 7th event in our regional and global energy series, we're focusing on Latin America, which is a region of great energy promise, but also challenges for energy trade and investment. I'd like to thank Cindy Arnson and Vera Colon and the Latin American program for all they did to make this happen. And we're very fortunate to have two keynote speakers to help kick off our discussion. First, Mac McClarty, who's chairman of McClarty Associates, former White House Chief of Staff, and Special Envoy for the Americas under President Bill Clinton. And second, Ali Mushiri, the president of Chevron for Africa and Latin America. Both are old friends and leading voices in Latin American affairs, and it's great to have you both here with us. Our two keynotes will then be followed by a distinguished panel of policy and academic experts, Jed Bailey, David Goldwyn, Jorge Piñon, and I'll say a little bit further about each of them in a moment. For this forum, we'll be making available cards for any written questions. You'll see the monitors with cards, so just give them a little signal if you'd like to write down a question, which they'll bring up to me. And please be sure to write down also your name and affiliation on the card and as we go along. So without much further ado, I would like to go to our speakers, our keynote speakers, and introduce Mac McClarty a little bit more fully. Mac is chairman of McClarty Associates, an international strategic advisory firm with an active practice serving clients with interests in Latin America and around the world. Mac is also chairman of the McClarty Companies, a fourth-generation family transportation business, now including operations in the US, Brazil, Mexico, and China, which makes one think. Mac served a decade as CEO of Arkla Incorporated, a Fortune 500 natural gas company with more than 2 million customers in 11 states. Following Bill Clinton's 1992 election victory, Mac entered public service as a member of the Clinton administration. As White House Chief of Staff, he helped enact the North American Free Trade Agreement, which is something that is being mentioned not just a little bit these days, as well as the historic 1993 Deficit Reduction Package and other landmark legislation. A member of the President's Cabinet, Mac also held the roles of Counselor and Special Envoy for the Americas, helping to organize the inaugural Summit of the Americas in Miami. So it gives me great pleasure to welcome Mac McLarty to the podium.
Jan, thank you very much. Very generous introduction. Jan, thank you very much for a very warm and generous introduction. I am always pleased to find or have an opportunity to be at the Wilson Center. This is such a venerable institution, but I think under the able and energetic and forceful leadership of Jane Harmon, I think it's been renewed and moved to the next level. Andrew, it's always good to be with you. Thank you for your very kind words. I've learned a lot more from you over the years, I think, than going the other way, but it's been a delight to work with you, and I look forward to doing that in the future. And Cynthia Aronson, thank you for all of your leadership, both for the region and more broadly. And you've got a great team here, as you noted, with Paulo and Duncan and others. I do think the Wilson Center has positioned itself in a unique way and in a smart way to be engaged in a focused manner, the pressing challenges, issues, and opportunities of the day. And I think that makes the center's work more relevant than ever. And I think energy certainly is at the centerpiece in many ways, not speaking fully objectively, Jan, but I think in many ways at the centerpiece of that work. I do think the center provides a safe space, if you will, to use a term that Jane has used from time to time, to have serious and civil discussions, sometimes disagreement, to kind of work through issues and find hopefully some common ground at the end of the day. In terms of energy, as Jan kindly noted, I'm a fourth generation participant in the automobile business and had the privilege of serving as a chief executive of a New York Stock Exchange natural gas company, clean burning, domestically produced, environmentally pure natural gas. That was our mantra then, and it is today. And then had the privilege, as David and Jan did, to enter public service, and both certainly made meaningful contributions in the Clinton administration and continue to do so in their current work. But my point is, as Ollie knows, and I'll say more about Ollie in just a moment, and we've known each other and worked together for many, many years now. I've been together, I think, now 3 times in the last 30 days at various meetings and conferences. But energy is at the very heart of cross-cutting issues, as so many of you know in this room. They affect our well-being, they affect our environment, they certainly affect our work and our competitiveness. And President Clinton used to, from time to time, David, as you might recall, accuse me of kind of being Johnny One Note, as he would say, because I would remind everybody, particularly coming from the natural gas business, that energy, Ali, was the driving force. You can't have economic growth with increased productivity without rekindling inflation if you have energy prices too high. Certainly the American public and publics around the world identify with prices at the gas pump. So it goes to the very heart of commerce and life. So I think this conference, Jan, that you and David have organized, very timely and particularly centering on the region. Now, with that backdrop, no one quite knows where oil prices are going, perhaps other than Ali Mushiri. And Ali will be following me, and really no one does have a more depthful and broader understanding of the energy landscape than Ali, who covers about half the world, literally, for Chevron. So I'll leave it to him to get into some of the specifics, but obviously we've had a dramatic decrease in oil prices. We've seen an uptick here in the last 3 or 4 weeks or so. But the point is, these new realities, in my judgment, are remaking in many ways the Western Hemisphere energy sector yet once again. Now, I don't want to have too much hyperbole, particularly with Ed Schumacher in the audience here, but the North American transformation is pretty dramatic. It's a pretty profound change. It's a real change. It's a strategic shift for sure. And if you think about it, since the 1920s, energy security has been kind of at the primary pillar of U.S. national security policy. Our mindset has been one of energy scarcity and open access to global supplies. But that mindset is changing as the United States now finds itself in a position of, if not energy abundance, at least in a position of increasing significant supplies of natural gas and oil in our country and in the North American continent. And the technology revolution, which Ali and others in this room understand very, very well, has just been remarkable. I remember 20 years ago working with our E&P people, and you can begin to see the early soundings of what is now horizontal drilling and fracking and so forth. We used to call it kind of infield drilling. We'd look at the technology, Ali, as you know, and that was, you could see it on the horizon coming, but not certainly to the extent that we've seen it today in terms of development of reserves. So as a result, the agenda has shifted, the balance has shifted, the weight has shifted. It's still a strategic urgency, but now economic competitiveness and global climate change are more at the forefront of the energy discussion. And this is affecting relationships both here at home, Canada, think of the Keystone Pipeline, and certainly in the Middle East. And it's giving us new tools to look at energy in terms of diplomacy. The first thing, at least I think of, is the Ukraine and Russia and how can we affect that balance, and David, you and others have written about that. But also right in the region, as Vice President Biden talked about recently when the Caribbean leaders were convened here in Central America, how we can work in the region here in terms of exporting natural gas and oil. So it's really a pretty profound change. Then you go to Mexico, which Cynthia and Duncan and others are very aware of in terms of the historic reforms. Jorge, I'm sure, will talk about that, as well as Brazil. And so North America and the platform becomes really a superpower, if you will, certainly much more formidable player to give us a much more competitive region directly related to manufacturing and a much more secure base of supply. So it's a transformation, but as Lee Iacocca, the venerable automobile executive, once said, sometimes Americans run from one side of the boat to the other side and wonder why it tips over. So we don't need to lose our balance or perspective in terms of these increasing energy supplies. We need to be very, very steady and careful as we move forward. But it's certainly affected, I think, the public's view of our willingness to engage in other parts of the world, particularly the Middle East, regarding energy. Now, offsetting that is clearly what's dominating the news in terms of terrorism and ISIS and so forth, and that's going to unfortunately remain with us for some time, it appears. And I would add as a note, energy is going to be, I think, a very central topic in the 2016 presidential election, and it'll be interesting to see how that plays out. No predictions from me today, however. So with that, North America, the platform here with Canada, Mexico, and the United States has clearly changed the landscape and supply base, affected oil prices to some extent worldwide, certainly natural gas prices. But as all of you know, Venezuela has the largest proven reserves of oil in the world. Brazil has a deep water that really contains enough oil and gas to vault it into the world's energy producing elite, challenges at the moment. Cleaner burning fuel of natural gas is pretty prevalent in Bolivia, Peru, Trinidad and Tobago, and Venezuela. Canada obviously has a big shale play there. Mexico and Brazil and Colombia have potential shale formations that are almost certainly going to be developed. And Argentina, I think, has the second largest reserves, potential reserves, and maybe more than potential, of shale play, second only to China. And has been suggested in a recent study, there's clearly, to me, a natural partnership, given those potential reserves, particularly so many relating to shale, between the United States, Latin America, and the Caribbean. To add to that picture, Colombia is rich in coal, and Latin America, I believe, has the cleanest overall energy mix in the world when you consider hydro and wind, geothermal, and other alternative sources, including ethanol, particularly in Brazil. Even Chile, which is not abundant in energy, has gone to the Atacama to develop solar energy resources. So at the same time that these natural resources exist and are certainly recoverable, there is no guarantee that they will be fully developed. And my point is, what occurs above the ground is oftentimes even more important or equally important to what happens below the ground. And in my judgment, Latin America still has work to do to maximize their energy potential. The economics of exploration and production drive investor interest. They soak up capital, they soak up equipment and talent. And make no mistake about it, other factors, regulatory frameworks, quality of the infrastructure to the environment, and certainly political considerations play a critical role about how these reserves are going to be developed, particularly given the long time frame of energy investment and returns. So in an environment where you have energy scarcity, resource-rich nations like Venezuela and Ecuador held the cards. Investments were almost certainly to be made in that environment. But now with an abundance of energy resources, particularly in the North American platform, investors have other opportunities. They can go elsewhere that are more promising. And as capital, as we all know, is a coward at the end of the day. It's going to go to the safest haven for the highest return. And so that paradigm has shifted in the energy sector. And that's why we're seeing some slowdown in investor interest in some of the regional energy plays. And that's going to directly affect, along with falling prices, government's ability to lean on national budgets to meet the rising expectations of growing middle classes within the region. So it's more than just a matter of investment returns and boardrooms of energy majors and stock prices, as important as that is. It's also a matter of strategic interest in economic development. So there's a fundamental conversation about what kind of region Latin America really wants to be as they seek to diversify beyond commodities while trying to grow in an equitable, sustainable, broad-based manner. And I think this session at the Wilson Center is right on point in discussing those issues. That brings me to my last major topic, which is China in the Americas, which is becoming much more prominent. Just in today's Wall Street Journal, Premier Li in Latin America, Beijing to unveil South American investments. When we were in the White House a few years ago, I must admit, but if you would have said China was going to have a major impact in Latin America, I think you would have been among a small minority and would not have had much time to develop your case. You would have been dismissed, other than the Taiwan issue, which was a hot topic in terms of China and the region. But now, just 10 years later, a decade later, China has become a major force in the region, both in energy and more broadly. They are the top trading partner for Brazil, Chile, Peru, and the second highest trade partner to Argentina and Cuba. Their investments are growing, as this article noted. So it's not your father's hemisphere, to use that phrase that has often been used before. And China's growing in terms of natural resources, which are paramount to their future security and economic development, even though their economy has slowed somewhat. And at last year's CELAC meeting, many people really missed perhaps that China committed with the Xi administration to $250 billion in investments in Latin America and the Caribbean over the next 10 years. That's real money. And even if it is aspirational, it still underscores that China is committed understandably, to protecting and advancing their interests to secure energy resources to sustain their economy. So this is going to have, and already is having, an impact in the region, both from an economic management standpoint and to some extent a democratic governance standpoint. So with all of that said, let me conclude with my central message today. I really believe the United States has an opportunity to promote a very different vision for the future. Not in competition to China, but in terms of emphasizing natural collaboration and partnership within the region, particularly given our singular technological expertise relating to the energy industry. I strongly believe that energy needs to be a sector that brings our hemisphere closer together. I think, Ali, that was recognized at this last summit and discussed. I certainly remember when we had the first Summit of the Americas, which Jan was kind enough to note, and the Venezuelans, Pedro Borelli, as I remember, insisted we put energy on the agenda, and the Bolivians insisted we put environmental stewardship on the agenda. And they both were absolutely right of the 23 initiatives. So I feel like I've got kind of a stake or a responsibility to advocate that today. There are clearly complicated issues in the region. Many of you understand, have written about, spoken about those in a thoughtful, serious way. But energy should not be one of them. As a region, I would respectfully submit that we need to work together because we have much to do, and the promise and the vision of achieving a great deal together, and in the process, really delivering on lifting people's lives and securing better futures, we can have a much better chance of succeeding together. One of my favorite quotes is from Will Rogers, who once said, "Even if you're on the right track, you'll get run over if you just sit there." Well, my point is, we do not need to sit there. We need to engage and cooperate because we have much to offer each other. It is time to move ahead together. I look forward to our discussion today in that regard. Thank you very much.
Thank you. Well, thank you very much, Mac, for a terrific start for our session, and it's now a pleasure to introduce Ali Mushiri, who is president of Chevron's Africa and Latin America Exploration and Production Company, where he leads all the upstream operations in Africa and Latin America, including on the Latin American side, Argentina, Brazil, Colombia, Trinidad, Mexico, and Venezuela. Why, that's just a very small amount of territory, Ali. Ali has served previously as Managing Director of Chevron Latin America Exploration and Production, and before that as General Manager and Advisor to the Vice Chairman of the Board of Chevron. He started his Chevron career in 1983 and served in positions of growing responsibility in Houston and the United Kingdom, with assignments in the Gulf of Mexico and the North Sea, amongst others. And it's a great pleasure to welcome my good friend Ali Mushiri to the podium.
Thank you very much. Thank you very much. Thank you. Mark, can you hear me? Okay. Well, first of all, thank you very much. You set the stage correctly. As always, you're an expert in Latin America, and it's my pleasure to follow your comments in here. Since the topic is about issue and prospects in Latin America, I want to set the stage by showing on the few slides about the dimension of the energy that Mac was referring to. I think he made a few points, and I want to build on that. It's in Latin America, we need to maximize energy potential for economic growth. And I like to emphasize on that, and I'll talk about the issue and what are the opportunities that we can deal with that. And Latin America need to recognize as a region what they want to do with their energy. And the last comment he made was really appropriate about Latin America. It's a very complicated area, but when it comes to the energy, it's not really complicated. It's exactly what is required to put together and make it happen. And if you look at the whole region, I think energy can play a significant role in changing the social economic dimension that we are struggling with a little bit in Latin America. The picture that you see in here is our upgrader in Venezuela. It's a massive construction of facility to upgrade very heavy oil to the light oil. Basically, it leaves the country as a really almost a finished product. It goes to the refinery, convert very quickly to something else. The facility has been built, is tremendous expansion that add to the potential of the Venezuela. There's more to come, and you got to be willing of the government to make that happen and monetize the energy in Venezuela as well. I got to put that page up. Disclaimer.
You lawyers.
Because I'm going to make some comments that are going to refer to it as Ali Mushiri's comment. There are some that is really referred to Chevron. Therefore, bear with me. I got to put that up. And also, I promise you, I'm going to have only one view graph to tell you about Chevron, because I think I want you guys to know the depth of our commitment to the region as a corporation. We've been in Latin America over 100 years. In some of the country, we've been there throughout the good times, bad times, low price, high price, whatever been. We've been with our partner for many years, and we're going to continue to do that. At the beginning of the presidency of President Obama, he called Latin America a region on the move. We believe in that as a corporation. We will continue to invest money. We believe in the people. We believe in the potential, and we believe the strategic tie that Latin America has to North America. When I talk about Latin America, I include Mexico as part of it. Chevron have a tremendous operation. We like to be in more countries, but as you know, we got to go where the oil and gas is. We have a major operation in Colombia, Venezuela, Argentina. We operate in Trinidad, and we do have major capital projects. Some of these are in the magnitude of billions of dollars that we invest. Our commitment is a long-term commitment. We are in 6 countries as far as exploration production goes. But if you add our downstream, we are over 10 countries in Latin America, and we operate also in finished product like lubricants and some of the downstream aspect of our business. Now let's talk about Latin America for a minute. When we talk about oil resources and production, this is a little bit busy chart, but I want to put things in perspective. When you talk about global energy and resources, Latin America has one of the largest resources. Technically, we know it has 38% of the total global oil in place resources. But when you look at what it can produce today, with the incremental investment, we only got 9% of it. That means there's so much upside. On the chart on the left-hand side, when it comes to the production, and this is what Mac was referring to, potential. If it's underground, it doesn't have a potential. It's good to brag about it, saying we got so much resources, we are bigger than former Soviet Union, we are bigger than Saudi Arabia. Unless you monetize it and convert it into the currency that improve the economic system, is really nothing more than research underground. When you look at the chart on the left-hand side, it shows the potential. With the magnitude of the resource that you have, and where you are on the production, it means your monetization rate is very low. Therefore, that's where we're talking about how you can improve the potential of the energy in Latin America. And I'm going to describe where that potential can come by exportation or increasing the domestic use of the energy, which can be significant also to impact the economic growth. From my point of view, when we used to talk about energy security in the United States. No longer we talk about that topic anymore. Unconventional changed the equation. But when we talk about global energy, which is integrated, we always got to take a look at Latin America. We've got to look at Latin America as a strategic place. We talk a little bit about China's interest in Latin America. China has a tremendous interest in energy segment or sector in Latin America. On the gas resources, actually in Latin America, they haven't even started exploring for gas. Venezuela, under President Chavez in 2001, he initiated a task called the Gas Initiative. And he was moving the country towards more gas than oil, or at least having a balance. Within the magnitude of 10 years, Venezuela discovered over 35 TCF of gas discovered. And we haven't explored yet. And the potential of the gas is huge. When you look at it, there is a significant amount of gas. But again, if you look at the chart on the left-hand side, from the production, the monetization rate is very low. There is hardly any exportation of the gas out of Latin America. Considering all the potential in Latin America as a region, I'm not talking about country by country, I'm talking about the region that Mac referred to. You got to look at the whole region potential. Some of the countries in Latin America import LNG when there is a bundle of gas in the continent. Therefore, that monetization rate, slow monetization rate, also have a negative impact because when you import, you have to buy it. This chart showing supply and demand. The chart on the left-hand side is show the production and demand. Latin America has been a net exporter. And with the potential that it is in Mexico, Venezuela, and Brazil, that can increase significantly. It requires investment, it requires focus. When you look at the demand is growing. But unfortunately, if you take that demand, call it a productive demand, that the energy converted into the economic growth versus energy is consumed, the growth is not there. The reason demand is increasing because population in Latin America is growing about 1.5% per year. And that's where efficiency of energy in Latin America come into question. There are countries in Latin America that energy is the most expensive commodity. Panama, electricity is one of the highest commodity compared to the other countries. Then you go to Venezuela, it's the cheapest commodity. Therefore, there is a synergy that it can come in play to balance availability of commodity throughout the region. However, there are countries that when the supply and demand cross, it would have a tremendous negative impact on the economy of the country. The chart on the right-hand side is shown Mexico case. The initiative that is taken by Mexican government is to prevent the problem that could come up when the demand is greater than supply. And Mexico is not far from that point. They need to turn that curve around. Argentina used to be the net exporter of oil. And now it has to buy LNG. Therefore, you got to look at how we can integrate the entire region to be able to have a better energy balance, and the whole region can benefit from it. If you look at this chart, as I pointed out, the population continues to grow. GDP is at the 3% per year. Therefore, as President Obama mentioned, we are on the move in Latin America. I fully agree with that, except we are moving very slow. Population is growing. GDP relatively is low. You don't even see a spike in this that assume there is something happened, that peak has happened. Therefore, for that purpose, I think it's very important we look at the integration of the whole region from the energy sector. I'll bring a good example. Mac and I were in Panama, and I met with few folks. In Panama, energy is the critical issue for the progress. And all you got to do, go another 600 miles to the east, and you see Venezuela with bundle of gas. And the connectivity is not there. Integration of the region, it will grow the economy of the region and the local as well. I want to close my comments by saying Latin America has the resources to impact socio-economic growth in the region. Absolutely no doubt about it. They need that integration. They need to collaborate. They cannot look at just one side of the equation for investment. Energy for exportation, generating revenue, bring it in, subsidizing the energy for the local use. It got to be balanced between domestic and exportation. It's a continent that can grow much rapidly with the bundle of energy they have and can be affordable. Latin America lacks the infrastructure capacity to allow market-driven pricing rather than subsidies and control price. The reason the price is controlled and subsidized in certain countries is because there is not infrastructure. You do have a gas in one country, but you don't know how to get it on the other side. Market-driven, affordable energy enhance the economic contribution across social sector. Today, energy is available in the major city in the Latin America. You step outside, there's a tremendous gap exists. If somebody wants to start an enterprise, simple enterprise, panaderia, today energy become a big issue. Because if that panaderia is not in the major city or at least mid-sized city, is somewhere in one of those pueblos, it would be very difficult to start that business. Therefore, we need to make sure to integrate that. Lack of reinvestment in energy infrastructure has kept economic growth isolated. Tremendous limitation on that. When I look at the Latin America, I look at the integration. The integration is the one that will make it successful. And my last view graph I want to show you in here is the comparison. On the left-hand side, our economic growth is highly dependent on infrastructure. It wasn't energy. We've solved the problem. Unconventional answer or energy security. But it's infrastructure that make it happen. On the right-hand side, you look at Latin America. The only piece of pipeline that I can tell you connected is between Venezuela and Colombia. Gas goes back and forth. And also between Bolivia and Brazil and Argentina with limitation. But when you look at the continent, again, Latin America portion, Central America is suffering for energy deficit because there is no infrastructure. And when those are introduced, you're going to see completely different dimension in the economic sector. And I believe, or hardly believe, that it will have an impact on also people, economic growth and social system that we have in Latin America as well. Therefore, since the topic was the issue, I want to raise that as infrastructure is critical, especially at the low prices. It gives us a great opportunity for all the nations trying to look at that and trying to build a strategy, creating that infrastructure among themselves to be able to move the region in the direction that it should be and take advantage of the potential. Thank you very much for your time. It was my pleasure to be here, and I'm hoping to return and at that time talk about Latin America with the identical view graph, that they do have as much infrastructure as we do have in our country. Thank you very much.
Thank you.
Well done. Thank you. Yeah, thanks.
Well, thank you very much, Ali, for a splendid presentation. And we have the chance to ask Mac and Ali a couple of questions before we get into the panel. I wanted to start by noting the tremendous upside potential that both of you talked about. And if you were to picture yourselves in the Oval Office, now that they've had the discussions on a hemispheric basis with other leaders of Latin American countries, what kinds of things would you suggest that the United States should stress, the one or two things that we should stress, either from the private sector standpoint or the public sector standpoint, to try to take advantage of this upside potential that you're talking about?
Well, Jan, first, I probably would ask my colleague, Colonel Donahue, what I should be thinking about and how I should order it. But I think the basic notion or basic premise I would put forth to the President would be really alluding to my earlier remarks that energy was right at the heart of so many cross-cutting issues, both from an economic standpoint, a security standpoint, and an environmental standpoint. Therefore, you can make, I think, a very persuasive case that it should be a very high priority. And then I would move to the next point, that there is a natural complementary relationship and partnership within our hemisphere and our region that can not only strengthen our U.S. interest, but in the process strengthen and develop our neighbors' interest. And I think finally, the world is, so interconnected, but unless we're strong at home, we're not going to be strong abroad. And we see a tremendous push that you alluded to appropriately in terms of TPP and so forth, this big trade agreement with Asia that I hope very much will pass. But I would also make the case we need to be very mindful of what's happening here in our own geographic area, in our own block, if you will, in a good one, to strengthen that. So for all of those reasons, I think you can make a pretty persuasive case that energy and a relationship with Latin America, particularly tied to security, economic competitiveness, and the environment, should be a centerpiece.
Oh, first of all, my comment would be, don't forget about Latin America as a whole. Sometimes we have a tendency to not talk about Latin America. Turn on the TV. Just measure how many minutes do we spend every day talk about Latin America compared to what we cover other places. For Latin America, healthy Latin America is going to be a healthy North America, United States. Yeah. And we got to keep that in mind. Regarding the energy, I always advocate that one before when we're talking about energy security. The paradigm has been every time we talk about energy security for our country, we look at Middle East. We never look at South. We never looked at what Latin America can provide. And it's much better for us to focus to our neighbor to get things done than going far away that we have done. I think this is also a great opportunity for us trying to look at what does it take for Latin America to utilize the potential of the energy they got to change the economic, social system that is in place. I really do believe that. I believe that if we get the network infrastructure in place, the simple infrastructure in place, we're going to see tremendous change in the social system that we are experiencing in Latin America. No doubt about it, availability of energy are there in the major city. But when you go outside, that's where the gap is created. What they have, what they don't have. And I think we can do that. And when we talk about energy, not because I work for the oil and gas company, today affordable energy in the larger scale to move Latin America forward is oil and gas. And for Latin America, it's gas. It's the cheapest, cleanest way of move the gas forward. And we got to do that. The other thing I would point out is, if there is investment that we got to help the Latin America countries, put the money into the infrastructure. That's the help we can provide as a private sector, as well as government, to make sure infrastructure are being built.
Well, thank you very much. And at this point, I'll ask our panelists to come up and join us here at the dais. We will be joined by Jorge Piñon, who will be focusing first on Brazil and Argentina, And Jorge is director of the Latin American and Caribbean Energy Program at the University of Texas at Austin. Speaking next on Venezuela and the Caribbean will be Jed Bailey, who is managing partner of Energy Narrative. And then speaking on Mexico will be my good friend and colleague David Goldwyn, president of Goldwyn Global Strategies and former State Department Special Envoy and International Energy Coordinator. I hope, Ali and Mac, that you will be able to participate a little bit with our panelists, and we'll continue the discussion. So to start with, let's ask Jorge for his take on the Brazil and Argentine part of the equation.
Do you want us 10 minutes or?
A little bit less if you can make it so that we have time for questions.
That's the problem following the two keynote speakers. My list from their talk, as you can see, is quite vast. So
You don't have to repeat what they said.
I'm sure we can have a good sobremesa afterwards on some issues. Let me address two issues and then come to Brazil and Argentina in a minute. If you listen to our two keynote speakers, the key was not resource-based, and it's not. The key is monetization, and the key is governance, contract models, capital, technology, and most important, which is one of the things that we're lacking in our region, is continuity of the rules of the game. Oil companies would take the commercial risk, oil companies will take the technical risk, oil companies will take the geological risk. But the most important factor for oil companies to manage a risk is the risk of the political risk associated with the contracts. Every country has the right to put on the table what the rules are. That's a sovereign right. And then the private sector can opt whether it comes and invests or not. But what the investor cannot handle is the lack of continuity in the rules of the game. And those are one of the issues that we face in Latin America, and what I call it is the lack of political maturity and political continuity. We cannot play a game in which the rules of the game are changed every 2 years or 4 years where there is a change of government. It is very difficult. This is an industry that is capital intensive upfront, huge capital intensive upfront, that needs then a period of anywhere between 15, 25, 30 years in order to recover that investment. And not only to recover that investment, but really to monetize that resource in its optimum long-term manner, not only for today's generation, but for future generations. We have countries in Latin America, and we can talk about Brazil, we can talk about Argentina, we can talk about Venezuela, who have major challenges in order to meet the demands of their population, whether it's education, whether it is roads, whether it's hospitals, whether it's food issues. And they tend to go to the petty cash box of the oil company. I understand. I would not want to be a politician in one of these countries because it is very difficult. It's what, just like any enterprise, how do you manage profitability and long-term growth? And that is the challenge that we face in Latin America, that we have a political governments throughout the region that face huge challenges. And in order to solve that political challenge, they have to go into the resource base in order to borrow that money. And look what happened in Mexico. The challenge for Mexico, for Pemex, that was for 75 years, it did not reinvest any of the money that it needed for long-term growth. Quickly then, a couple of remarks on Brazil and Argentina. Resource nationalism is nothing new. 1953, Getulio Vargas, o petróleo es nosso. The oil is ours. One of my degrees is Latin American Studies, and when I joined Shell, I didn't know what good was going to do a degree in Latin American Studies, and let me tell you, it helped me quite a bit throughout my career. So Brazil is now going through a difficult period. Brazil all of a sudden found oil, and boy, they said, oh, no problem, we can monetize it by ourselves. We don't need the technology, we don't need the infrastructure, we don't need the capital, we can do it by ourselves. I think that is a road that Brazil has taken here in the last couple of years, and I think it's going to show them that they cannot do it alone. We comment about technology. There's another part of technology, and that is know-how. We can buy technology off the shelf. But the application of that technology in the field is a specialty of companies like this when they work in Angola, when they work in Venezuela, when they work in Argentina. So it is not only technology, it's how do you apply that technology, and that know-how comes from the private sector. Brazil has a major challenge. I think I would not be surprised if you see some change in the near future because Brazil now has to compete. Brazil has to compete in a $50 market. Brazil has to compete with Mexico. Brazil has to compete with Guyana. I mean, one of the most favorite monetization indexes that we have at UT when we do our monetization index models is Guyana. And Exxon is just drilling off Guyana. Guyana could very well be a very attractive company in which to invest. So they're going to face competition, and I think that's good news. I think it's going to wake up Brazil. Argentina, we were just there for a whole week. We got back Saturday night. Huge potential in Argentina. And again, my conversations with them was the same one that I just mentioned to you. You can set the rules of the game, and then the private sector will decide whether they want to come in or not. But there has to be stability. There has to be continuity, both in energy policy, economic policy, monetary policy. We cannot have the volatility. Talk about the volatility of price. You ought to see the volatility of the rules of the game in some of the countries in which we operate. Quickly to finish up. Mac, technology, but also education. We just signed 2 major agreements in Mexico with UNAM. We just signed an agreement in Argentina with the province of Mendoza. We're working on 2 other major agreements. It is not only technology, but if you look at the 100,000 strongs in the America, if you look at Mexico's 100,000 projecta, Mexico is going to need 14,000 petroleum geologists and petroleum engineers in the near term. The regulators in Mexico do not have the staff to regulate the industry. So yes, as a representative of an academic institution, I think, Mac, the other area in which we can really cooperate and work with Latin America is in education.
Yeah, good point. Great point.
Well, thank you very much, Jorge. I appreciate also your keeping to the time limit. Jed, would you like to speak next?
Sure, thank you. It's a pleasure to be here and have this opportunity to share some of Energy Narrative's thoughts about Latin America's energy sector. And as was noted, I was asked in particular to speak on Venezuela and the Caribbean. So I'd like to start with Venezuela. And I'm sure, as everyone knows, it's facing a relatively acute economic crisis these days. But to put a few numbers behind that, the recession that began last year is expected to deepen significantly this year. Inflation is now running 60 to 70% per year and is accelerating. And I think more importantly, we've seen the currency plummeting over the last year as well. So to put that in perspective, the government rate, one of several government rates, is currently about 6.87 bolivares to the dollar. Compare that to the black market rate back in 2012 of around 10 bolivares to the dollar, or the black market rate just last year of 100 to the dollar, or the black market rate today of closer to 300. So there's enormous economic distortions being caused by this discrepancy between government rates that are different for different segments of the economy, a black market rate that is very different and changing rapidly, and the resulting extreme shortages of basic goods, basic priorities for the population as a result of the lack of hard currency based on these policies. So as we look at the economy going forward, the government is desperately dependent on the hard currency that's earned by oil exports. We compare the earnings from PDVSA exports and others to the economic needs, in particular for the government budget. The estimate for 2014, one of the more reliable numbers I've seen, estimated the government needed an oil price on the order of $150 per barrel in order to balance their budget in 2014. That was last year. As everyone remembers, the oil price never reached that even at the peak. It was around 142, and Venezuela has a discount relative to other international benchmarks. The current price today is roughly a third of that level. So there's no chance of getting anywhere near the kind of income that they need in order to balance that budget in the near term. So it's not at all surprised that President Maduro is off talking to OPEC, talking to non-OPEC players, trying to find a way to bolster the market, to raise the price as much as possible, convince others to bring oil off the market, because Venezuela certainly can't afford to take any of its oil off the market. And it is something that he obviously needs to do. It's something that he is highly unlikely to be successful at. There's very little support internationally for the kind of market support that was implemented back in the late 1990s to try and boost the price then. We don't see international cooperation around that concept today like we did then. So, next option, of course, is go back to the folks that have lent you money in the past. China is a key funder of Venezuela historically. They've provided very large loans for infrastructure and other budgetary support, much of it backed by future supply of oil. And indeed, a good share of Venezuela's exports now are going to China in order to pay off those loans. However, as was noted earlier, with Chinese Premier Li is in Latin America, visiting Brazil, visiting Chile, visiting Peru, visiting Colombia. He is very, very clearly not visiting Venezuela, Argentina, or Ecuador, the three countries that would have been a priority for Chinese visits just a few years ago. And indeed, some of the statements that have been made from the Chinese government, they appear to be losing patience with some of the countries that they were supporting in the recent past, and there is less interest in throwing more good money after bad, particularly in countries that they view as perhaps less viable business opportunities than other investments, particularly in infrastructure, to be able to bring more exports out of the southern part of Latin America into China. So, Venezuela appears to be running out of options very quickly. And as the situation continues to deteriorate, one of the first things that we would expect to be cut back would be some of the largesse for the region, in particular, some of the highly subsidized oil exports that go to the Caribbean region in particular. Which brings me to the Caribbean portion of my comments today. So Venezuela exports around 240,000 barrels per day under a program called Petrocaribe, plus Cuba being about 100,000 barrels of that total. This is not free oil, but it's very heavily subsidized financing for the oil. So there's very little payment up front, very long-term terms under very agreeable financing to allow those payments to be spread out. The concern is if that oil gets pulled back dramatically or abruptly, how do those countries adapt to the sudden shift, particularly in the shift in their terms of trade? Because certainly the physical supply can continue. Petrocaribe is only about a quarter of total oil demand in the region today. But the payment terms, the need to suddenly pay for that oil when it's delivered as opposed to 20 years in the future, will be a significant economic shock and a budgetary shock for many of these countries. So about 2 years ago, Energy Narrative was asked by the Inter-American Development Bank to do a pair of pre-feasibility studies, one for Central America and one for the Caribbean, looking at just a rough analysis of the cost to bring natural gas into each of those regions. Because Central America and the Caribbean is perhaps unique in the hemisphere as the few parts of this half of the world that does not have its own natural gas. They're currently, in fact, importing oil for power generation, which is not great for the environment and incredibly expensive. As was noted earlier, power prices in Central America are among the highest in the world, and the Caribbean is right there with them. So we did a very quick study to get a sense of what would it take to bring in the infrastructure to bring natural gas to the region. As a result of those two studies, the Inter-American Development Bank commissioned two much deeper feasibility studies. Energy Narrative was one of the consortium that looked at the Caribbean, looking in much greater detail on the cost to bring compressed natural gas or LNG or pipeline gas from a number of sources across the region to key countries within the Caribbean, as well as the commercial structures that could possibly be put in place to help facilitate that investment. The short answer is there are two key issues that are holding this back. One is the fact that these island countries are very small. So that the question of scale and how do you spread the cost of the infrastructure across a very small amount of demand makes it very challenging to build that infrastructure out. For pipelines in particular, given the distances, for LNG, the need for the regasification terminals, or for CNG, the high-cost specialized ships to move that. Adds up very quickly when you don't have much demand to spread it over. So the question of scale is a critical issue. Related to that is the question of financing. So if you have this massive amount of infrastructure to be built, how's it going to be paid for when many of these countries are already facing a debt crisis, already have severe pressure on their government budgets given their energy consumption today. So we spent a fair amount of time looking at how to manage those two issues. And we're joined by representatives from the U.S. government and other interested institutions as we began to grapple with these bigger questions. One of the recommendations we made is that it appears that if you can get many of the countries in the region to work as a collaborative group, to negotiate as a single bloc in order to achieve more preferential terms or have a stronger say in how the natural gas is priced, we believe that would be extremely helpful in creating the commercial chains required to bring the gas in. The problem is then you have the political difficulty of organizing all these different countries and moving them at the same pace. So there's certainly a lot of work left to be done to consider those issues, to think through how exactly that could be implemented. But it's clear there's a strong interest from the region, perhaps less so at $60 a barrel than at 110, but still a recognition that this energy diversity and the building of this infrastructure is very important for their energy futures. And so we look forward to continuing those discussions and continuing to move that forward as we consider what the specific technologies and options may be for the region.
Okay, thank you very much. On to David.
Great, thank you, Jan, and thanks for providing a continuing platform for the book, so we can sell more copies, but also for this issue. And also, I want to thank all of my colleagues. I don't think we would have the attention to Latin America policy since Mac, you created the position that you did and put this as a cornerstone to our policy. And you've been a huge investor and risk taker in the region. And Jed, I think your study has transformed the conversation about gas and Caribbean, and Jorge was modest, but he's educating our policymakers as well as Mexico's and the regions on unconventionals and on safety. But my job is to talk about Mexico, and I think most of you know the Mexico story, a really remarkable transformation, breaking Pemex's monopoly on oil, CFE, the national utilities, monopoly on electricity. Legislation was passed really just last August, and in less than a year there has been really remarkable success. They have started a bid round, first for shallow water and now for mature fields with deep water and heavy oil and unconventionals coming next. In less than a year, they have managed to convert diesel-fired generation to natural gas and brought down industrial electricity prices a significant amount, which was the core of the reform. That is going to help them with the jiu-jitsu of the energy reform, which is really not just to grow production, but to attract asymmetrical investment to Mexico and other areas, and they're starting to see investment in petrochemicals and in other areas. But you have to appreciate that having these monopolies and having a statist culture for so many years creates a really formidable bureaucratic task. All of the rules for letting contracts, for setting regulations in safety, in licensing, and in other areas is a huge task undertaken by people of enormous integrity and character and education, but a relatively small group which has an enormous job. And so I would say, I'm going to take you through the different sectors. I think Mexico has adopted remarkably well to the low oil price cycle. I think they have adjusted terms on oil. They're enjoying the benefits of cheap U.S. gas on electricity. They've taken some significant steps on governance. But they also face some very serious challenges, and one of them is financing the bureaucratic capacity they will need to go forward, and the other is shaking loose this long-term culture. So I've talked a little bit about electricity. Most of the conversion from diesel to gas is coming from U.S. gas. 2 new pipelines opened this year, more pipelines to come. U.S. gas exports will probably double from about 1.8 BCF a day in 2013 to 3.8 in 2020. But this is really working, and it's really a model for the rest of the region. And Jed's study for the Caribbean and Central America is essentially the same model. You know, whatever the prices are, even now, diesel prices are double what natural gas prices are. So you bring down the price of feedstock, you bring down the price of electricity. That's how you get the industrial growth that Mac was talking about. The next steps in electricity are setting out the market rules for the power sector. And there is an awful lot of private equity money waiting to see what those rules are, waiting to see what the clean energy certificates will look like, to see whether it incentivizes efficiency, to see whether it incentivizes conversions of existing facilities. But I think it's a big story down there, and it will be a big success. On oil, the key issues really are the forms of the contracts and the fiscal terms.
And Mexico has done a really remarkable thing. They put out a first form of a contract, which was a production sharing agreement, which kind of looked like someone marked up an old service agreement and called it a production sharing agreement. Huge sort of amount of stress from the industry about what the terms were, all of these reports, any of which you could lose your contract for entirely. And so they listened and they changed the form. And they also watched the market, and now the fiscal terms are better. The reports are fewer. There are processes for mediating disputes when they come up, which lower the risk. And I would not be surprised in the next 4 weeks to see them issue yet another version of the original contract to accommodate some of those concerns even more. So it's a remarkably confident thing for a new regulator to do, to come out and put something out and change it and then change it again because they see the market changing. So I think that's been very positive. The first contracts were production sharing agreements. These mature fields that came out are license agreements. This license agreement also looked like a service agreement that got marked up into a license, but they're listening to comments. And the next real milestone to watch is going to be on the deep water. What will that contract look like? What will the balance between risk and reward look like? Will they really hear what the industry has to say? But now there are trade associations in Mexico, and the industry is getting together and talking as a whole, and there's a real dialogue going on there. So I think that's pretty positive. And as in our system, it's the Treasury Department sort of versus the energy regulators and everybody else who will have to strike a balance there to see whether, the more you make the contract, intrusive, or you put on requirements, will you have some balance on the fiscal side? So I wish them luck in that. Unconventionals, I think, are going to be a different story. The market is not great for unconventionals. The issues that Jorge spends a lot of time worrying about, which is where do you get water? How do you set rules for access to water, for transportation, for delivery? How do you have baseline measurements of what the conditions are so you know whether or not harm has been done? All those really remain to be understood and written. And I was in Mexico last week meeting with the new safety regulator, which has everything from deep water to gas stations. And so it's an enormous task, and they have to put out rules for everything, for shallow water, for deep water, for unconventionals. That's a lot of rulemaking, a lot of guideline making, and we're operating at a time when, because of low oil prices, their budgets and the budgets of all of the ministries are getting cut. And this is not a time to cut. So my message to Hacienda would be, this is a time to invest, even in tough times, in building up your regulators so they have the third-party help that they need. Just a few words on risk. I think this question of capacity is probably the biggest risk. Will the regulators have the resources they need to get the help that they need to put out good rules? The second, I think, is these contracts. They are still looking like the old statist style, where there are many reports and a great deal of risk and more information than the regulators can probably process. So will they get deep water right is really, I think, the big question. A third is security, and that is really the big elephant in the room, and people don't talk about it a lot, but a lot of the unconventional acreage came out of the north and won't even be offered because of security issues and lack of infrastructure. So how will the government step up? How will they respond? How will they communicate to industry that they understand the security issues in the areas where there will be operations and what the approach will be? Pemex is still also a bit of a risk. They are constrained a bit by low budgets, but they have owned this space for quite a long time. And when it comes to safety issues or to other issues, I think the companies want to hedge their bets by partnering with Pemex to the extent that they can, but the Energy Ministry wants to have the maximum amount of competition. And so they'd like to see a lot more independence. But they are very enlightened at the top. I think they are still kind of resistant in the middle tiers of the company. And so I think operating in that space and coexisting with Pemex is going to be a challenge for industry. The last issue I would say is politics. There have been sort of issues about impunity and corruption. It's still going to be incumbent on the Mexican government to step up in a bigger way to say that they get this and that things will change. A little of the bloom is off the rose from the early days, but these are people of great integrity, but they have to, I think, change the political context because it will impact investment. I think there are lots of things the U.S. can do to help in this space, and I think, Mac McClarty, you really set out a great part of the agenda. I would put safety first. They have to figure out what the rules are going to be for deep water. We can help them a lot by understanding what our rules are. A lot of the new safety regulators have not been to a shale gas site. We can bring them here. We can expose them to a lot of what the state rules are, Colorado, Texas, Pennsylvania, other places. I think there's a lot that can be done following on the Quadrennial Energy Review on cross-border cooperation on electricity, on standards. It's kind of nuts and bolts stuff, but that's how electricity trade will happen. And then, sort of a perennial or little things that we could do, like oil swaps. Mexico wants our light oil to combine with their heavy oil to make their oil more marketable. This is really just making their refineries more energy efficient, lower carbon, and more marketable. It's kind of a small step, so we can do it the easy way like we do with Canada, which is just don't take, just refine it there and use it there. But we're making them do it the hard way, which is find a counterparty, find somebody who wants to bring in heavy and send out light and fill out the papers, and they can get it done. It's a pathway. It's just petty, I think, in a sense, from a policy perspective, and unnecessary. So there are lots of things that we can do, big things, small things, but I think it is nothing but a positive for U.S. national security and foreign policy to help Mexico with this evolution, and they are heroic in what they're doing. So whatever we can do to help, I think we should step up.
Well, in very short compass, we heard from each of our panelists about a tremendous amount of territory, and thank you very much, David, and the others for helping us get a firmer handle on what's going on in the Latin American area. I will remind the audience that we will have cards available. If you could stand up and identify, Vero and others will have cards available. Please fill out clearly a question and your name and affiliation, and we'll try to get to a few of those. Let me just start to get the ball rolling by saying that we heard about individual country experiences and against the backdrop of a Latin American panoramic view that Mac shared with us at the beginning. Given all that's going on in a positive way in Mexico currently, what is the impact of that in other Latin American countries? Yeah. Could you give us a sense? You were in BA recently. You've been talking to the Brazilians and the Argentines and the Venezuelans. What is the interplay between what is going on in a more positive vein in one of these countries, Mexico, and frankly in a more negative vein in other countries that we've been talking about? Sure. Okay. In the energy area.
Well, I think certainly Brazil and Argentina recognize that they have a new competitor as far as Mexico is concerned in a $50 oil market. The advantage that Mexico has is that there's a continuous geology of the U.S. The Gulf of Mexico and geology do not recognize man-made borders. It is a lot easier to manage a development project in Mexico from our point of view, which is just 300-400 miles from Houston or Corpus Christi. The Port of Altamira is now being built as the next future offshore industry facility for Mexico. So it's a lot easier for U.S. companies to do business, particularly in deep water in Mexico, than it is in other countries. So I think the position for Brazil and the position for Argentina is that they're not the only 800-pound gorillas in the room. There are other 800-pound gorillas in the room. It is sad to see where Brazil has gone, because if you all remember, Brazil was our poster child for many years. And I do want to point out that the issue with Brazil is not the know-how. Brazil and Petrobras are still one of the best deep water companies in the world. No question about it. Back in 2000, they drilled a world record 6,100 feet well. So as far as deep water technology, Brazil, Petrobras is well known. If you look at the management of Petrobras, it's an excellent group, a cadre of professionals. The problem with Petrobras is that it got politicized. And again, then the issue of corruption. So the two things that we thought, even when Lula came to power, that we thought, oh, there it goes. There was stability, certainly at the beginning of the Lula administration, keeping their hands away from the cookie jar. And now we have seen Petrobras fall into that, or Brazil fall into that. And I hope it doesn't jeopardize the integrity and the quality of the national oil company. Argentina is just an issue of stability. Argentina has been a very rich country for many years, Ali, going back. I mean, oil production in Argentina is nothing new. Oil production in Argentina has been there for a long, long time. And by the way, if there is a region in Latin America in which we can really expand infrastructure, is in the Mercosur region, particularly natural gas. So the region, Brazil, Bolivia, by the way, politically, Bolivia needs to be able to monetize its gas. If Argentina is allowed to develop its natural gas infrastructure, if Brazil continues to find associated natural gas, Bolivia needs to be able to monetize its natural gas. And I think we need to take a look at Bolivia and have access to the sea, or at least for Bolivia to have access to exporting natural gas as LNG. So the region, I think the potential is there. We just need to get our house in order. But yes, they have recognized there is new competition in the region.
Well, thank you. Yes, Jen.
I would add one more point to that. I think another area that you do see this increased competition that Jorge mentioned is in the market for skilled labor. As was noted, we need, Mexico desperately needs engineers and petroleum economists and the rest, people to actually work the fields as they open up. And one thing that I think was a major factor to Colombia's growth earlier in the decade was the fact that you had this massive strike and then this purging of skilled workers out of PDVSA back in the early 2000s. So many very good Venezuelan oil executives and skilled labor moved into Colombia or up to Calgary, especially to work the tar sands up there. Now that Mexico is becoming an option, I think you'll see more and more of those being drawn to Mexico as well.
I'd just add two, which I hope will be a demonstration effect. One is on standards, the other is on transparency. So Mexico has put together one of the most transparent systems. Contracts are published, funds to the monies contributed to the petroleum fund are published. All of their regulatory conversations are on the record. It may be a little over the top, but it's very transparent and it addresses the issue of distrust. If some of that carries over to some of the other areas of the region, I think that'll be positive. And the other is standards. Mexico is looking at things like baseline testing for water and air and having those into a database that their water regulator and others can find. I think you see that carry over to Argentina and to other places. I think that'll increase the prospects for stable development and sustainable development of gas.
Well, I hope what you said is right, but I don't think other countries are very concerned about what's going on in Mexico. That's the problem Latin America, I think, has. I think Brazil is looking at what's for Brazil, Argentina look at what's for Argentina, and Mexico. And we got to have that in mind, that's Latin America is not uniform. I mean, that Brazil, it requires a lot of technology. Development cost is huge. Operating cost is huge. You look at Argentina, it's unconventional, tremendous resource. We've got a big project, huge investment, but the technology is there. It's a different technology. It's driven by supply chain. It's driven by human resources capacity. You can transform energy sector in Argentina, like Chevron and YPF have done in last year and a half, from almost zero level of technology and capacity to the level that we are in the manufacturing phase. It's very difficult to do that when in Brazil, deep water. The technology is in different level. Mexico, again, going back to these countries, they are looking for investment. What are the investment they are looking for? Brazil is looking for exportation. Argentina would look for internal. Therefore, you've got to have a different investment type of strategy for each country. Mexico, on the other hand, is being close to U.S. has a lot of pluses coming that direction. But if they don't take advantage of those pluses, they're going to isolate themselves more and more. One of them is the local content. We are saying, I think one of the speakers mentioned that because it's close to U.S., you can use the same manufacturing, you use facility. But if a local content become a big parameter, actually it's going to slow down the progress in Mexico. Therefore, the way I look at Latin America, you got to look at them separately, make a decision what the requirements are. But finally, you got to look at it, what I keep reminding everybody, you got to look at what Latin America needs to move forward. And that means, how can you get gas? As we're sending gas from US to Mexico, how can Mexico send gas to the Central America? What does it take? And I think Central American countries are more interested to figure out where that infrastructure come in, who is paying for it, how fast it's going to be, or Caribbean islands. If you want to get Caribbean island out of the Petrocaribe, get them facility and infrastructure, get the gas from Mexico to those islands or from Colombia and so forth. Well, I agree with you that they are worried about it, but I really don't think they're not as much as they're worried about where the investment going. How can the investment going to fall into place according to their strategy?
Mac.
Well, how quickly times can change. It hasn't been that many years ago when the Mexicans invited President Lula to talk about Petrobras and how they were moving forward in their energy sector, and now the paradigm's quite different. I think Ali is absolutely right in terms of it's not a one-size-fits-all. It's a very distinct market and very distinct situations with each country. But I go back to really just a core belief that I feel very strongly about, and that is, it to me is just such a natural collaboration between our technology and capital that we have here in this country, and to some extent Canada for sure, and the natural resources that are already in the region, the infrastructure, as modest as it is, but it's already in place. And you know, if I were either in the private sector or certainly in government, I would be looking at ways to maximize that collaboration and partnership, because it would make my job so much easier as a political leader. So that would be a theme I would just harken back to. I do think Jorge's point about education, which I should have noted did not, is a very, very compelling one. And I thought another point, there is a difference between technology and know-how.
Thank you. We've received a number of cards here, and I note, however, that you are not identifying yourself by name and affiliation, but I will go with them in any event. And a few of these cards are, in fact, directed to individuals, but others should, in the panel, feel free to speak to them as well. And there are a number of questions about the Mexican reforms and what the take is on the reforms and where are they going and so forth. One question is a little bit more pointed about the biggest risk now of investing in Mexico. And I wonder whether we could get the ball rolling by David talking a little bit further about the trajectory of reforms going into the future, risk of investment, how one in fact compensates against that risk. And Ali, there was a question about what your take is on that same question as well.
Well, I would say until they finish the terms, the biggest risk that I hear from investors is really contractual risk, the risk of that there's some potential rescission of the entire contract over a violation of reporting in one of the terms. And I think the government's aware of that, and they're trying to overcome history. The Mexican narrative on the core reason for the nationalization was that there was a Supreme Court decision dictating the ways that companies were to operate, and they were defied by U.S. companies. And so it was really the rule of law and the rule of Mexican law, which is their narrative for what was the cause of the nationalization. So there's a great deal of sensitivity about whether or not you can keep your contract if you don't follow the law. So they're balancing that. So I think working out that risk and getting that risk-reward balance right is probably the biggest risk. I think the fiscal risk is not huge because these are very long-term projects. I think security, it's early days, but I think companies have managed that, so I think that is manageable. And I think the other thing that people might worry about, which is, will this reform survive this sexennium? And I think that's in the back of the minds of a lot of people. But I think that it will, because Mexico will see, as Brazil saw with its reform, a great deal of investor interest, a great deal of new technology, and I think asymmetrical benefits, as they're already seeing in other parts of the economy. So I think that's going to be very hard to roll back.
Okay. And Ali, not least, the question was about Chevron and
well,
Mexico, as you won't be surprised to hear.
I think my comment in here goes for all the participants, and I believe I build on what Jorge is saying is absolutely right. Is Mexico opportunity is competitive with the rest of Latin America? That's, I think, is the question out there. And I think it ties back to what David said, how you make it competitive. The challenge is going to be there. That uncertainty is there. Because at the end of the day, the private sector is going to compare. It's not the government where the money going. Government can dictate the rules, but for us, opportunities everywhere, and we got to be fair to our stakeholders, shareholders, everyone, to make the best decision. And the concern that I have, they got to take a look at the entire region, as Jorge said, and figure out, is our opportunity on unconventional competitive with Vaca Muerta? Vaca Muerta is the largest unconventional outside North America. I mean, you got to look at it. Is Mexico unconventional is competitive? What are the terms that make it competitive? Even the resource base are there. I think that's the challenge that is in front of them. And I think in some extent they understand it. And other countries are watching. They're watching the terms and conditions more than how much investment coming in. What Mexico going to put on the table?
Another question ties into the China effect, the Chinese statements of commitment to infrastructure building in Latin America. How seriously should we take this? Is this a competitive challenge, or is this more of an opportunity perhaps for cooperation in the future? Anyone want to take that?
The largest contingent of foreign students at the University of Texas Petroleum Engineering program and Geology and Geophysics program are from China. Just let me put that. From Mexico, I think we got about 6 or 8 folks. By the way, Brazil has the largest contingent of University of Texas graduates of any national oil company, including Guillermo Estrella, who was the head of E&P for Petrobras. But we have in every single school in petroleum engineering, geophysics, we have Chinese students all over the place. That's, I'm just sharing that as a fact.
I would be, I'm not worried about Chinese ownership of equity assets in Latin America. I don't think it's that big, and the quality is not that high of the things they've bought into. Building infrastructure like railroads across the country in order to make sure resources can come from the interior, it's probably something Latin America needs. The question is always, what's the price? So for Venezuela, the price has been kind of mortgaging the future. And so that's going to provide enormous constraints for Venezuela. That's a bad mistake by the Venezuelan government. But the fact that China is doing this, I think if the standards are decent, and if it doesn't involve a mercantile strategy of owning resources long term, then it's probably a way for them to be helpful and a kind of a challenge, I think, for the international financial institutions to rise up and figure out a way to do things like finance conversion from diesel to gas in Central America and the Caribbean. I mean, just to take that project, I mean, the numbers may have gone up, Jed, but to take the whole Caribbean, and sort of convert it from diesel to gas is in the $200 to $500 million range or something. PDVSA, Venezuela spends $200 million a year, subsidizing Petrocaribe. So to have a 30-year loan to those countries, with decent credit terms to make that conversion, to provide credit support so they can buy gas on a 20-year contract, not on a spot basis, what does that really cost and what do you gain? This is the Asia Infrastructure Bank too. I mean, Chinese are doing things that need to be done and they serve their interests. I think rather than see it as a threat, I would see it as a challenge.
Any other comment on that?
No, I just add that, broadly speaking, when you're looking at energy markets globally, any new supply gets added into that mix and helps moderate prices when the prices are high. Any new demand helps add to that mix and can support prices as well. So when we look at China now being the primary source for incremental demand in the world, I don't really see a problem with them being a major source of investment to help with providing new supply as well.
I wish we had more time, but of all these cards, one stands out, and that is the environmental dimension. And the writer cites the degree to which environmental issues are really a part of the whole debate here in the United States. What about in Latin America today and into the future? How do we see that developing?
I would hate to see, and I lived in Mexico for 5 years, I would hate to see a Deepwater Horizon on the Mexican side of the Gulf. Again, the coordination that it took to manage the Deepwater Horizon incident, you can imagine the coordination that would be needed to handle a Deepwater Horizon on a transnational basis. It is extremely important that on safety and environmental, as David pointed out. The regulators, who are the regulators at CNH that are going to approve a deep water project for the Mexican side of the Gulf of Mexico? If you see the expertise of our regulators at Interior, at Bessie and Bomer, these are people that have been there for 30, 40 years. Where are those regulators in Mexico? And by the way, it's not the technical skill of the regulators, it's the culture of the regulator. Mexico only has one pool to go for those regulators, and that's Pemex experience. It is not the technical experience, it's the culture of the regulator. The regulator has to have a very strong culture to stand in front of a national oil company, of a Chevron or a Pemex, and say, this is the way things are going to get done to follow the rules. That's what I'm very concerned about Mexico, is the issue of safety and the issue of culture and know-how within the regulators, David.
I agree with that. But that said, I would say the issue in the political level of commitment to addressing environmental concerns is very high in Mexico. And you've got Conagua that cares about water, and you've got obviously the political risk there. I have to say, I have not seen that level of concern about the environmental consequences of development anywhere else in the region at the level that I've seen it in Mexico. There is concern about energy security, about prices, but the environmental platform. Argentina is, I say, one case. Maybe Ali, you've heard it, or Jorge, but at least from my time in government, that was not what they were concerned about. It was development, not environment. So I think we've got a long way to go on that agenda in other places in the hemisphere.
I would certainly agree. Certainly within the Caribbean, thinking from the downstream side, the emissions from diesel and fuel power generation are an issue, and they're certainly happy to reduce those, but price is the key question. And the ability to bring in cleaner energy is good, cheaper and cleaner is much better.
Thank you. Final word, Ali, on any of these questions or anything else that you'd like to share?
Thank you very much. I think I endorse every comment you guys made regarding the environmental and safety. I think the collaboration, we're going to see tremendous collaboration on the safety side between U.S. and Mexico, especially deepwater. It makes a lot of sense. Major oil company already talking about that. They take an initiative. And working with Pemex for the last 20 years, they are very responsible, and I'm sure they're going to be a great partner for all of us.
Well, thank you very much, panel, and thank you for all the great questions. I apologize for those that didn't have time, but want to just have us all join in a round of applause. Thank you.